Hi, guys. We are in balmy, really, really hot Richmond, Virginia. We just came from the Markel annual meeting. 2 weeks ago, we were in Omaha, Nebraska at the Berkshire Hathaway meeting. Very similar companies. Markel is just a whole lot smaller, just a $21.4 billion market cap. Shaoping, I believe, compared to, $800 billion or whatever it is, approaching $1 trillion for Berkshire Hathaway. The question we want to answer in this video is Markel the next Berkshire Hathaway? And I say it like that not just because the company is sort of fashioning itself as a carbon copy. It's an insurance company that invests to float in equities like Buffett does, not just treasury bonds, and in fact invested in public and in private equities. They have a very cool kind of tribal feeling annual meeting, which they put on purpose to cultivate a high quality, long-term shareholder base that's not going to sell at a moment's notice. They take care of their shareholders and their employees alike. So there are a lot of superficial and not just super deep similarities between these two companies. Mm-hmm. So Shaoping, I think a perspective a lot of people might have, and I think this is what the video is going to get at, is Berkshire, as everybody knows, has been an awesome performer, 3.8 million% returns, or close to that, since its inception in the 1960s. And in fact, if you could have included Buffett's 1950s record, it would be even better, but it wasn't Berkshire then, it was the Buffett partnership then. Compounded money at 19.8% annualized. Markel is not too bad. For the 38 years it's been public, I think it's grown at 15% annualized. Mm-hmm. You've done the research on this. I'm looking at some of it through the corner of my eye on your laptop. Mm-hmm. What do you say to someone who asks, if Berkshire's gotten so big that it can no longer massively beat the S&P, the best it can do is by kind of modestly beat the S&P, and a lot of people are saying that now, but you like all the kind of the vibe of Berkshire. What about turning your money and your attention to Markel, because it's this baby Berkshire, as it's often called, as a replacement? What do you say to that?
Well, before I answer that question, I think there's a few data that you guys need to know. Mm-hmm. Is that if we look at like 1 year return of Markel, is underperformed the market. If it's 5 year, it's still underperformed the market. But if we like drag this time period to 20 years, it beat the market a little bit, like 100% above.
Yeah, and I just learned this stuff shortly before we were recording. I mean, I'm a shareholder of Markel and of Berkshire, and I thought that Markel had done better. I mean, it has over the very long run, but a lot of that was kind of a really good performance early on. Over the past 10 years, over the past 5 years, not over the past 3 years, but at least over much of recent history, it's underperformed Berkshire and it's underperformed the market. So far, it would not be living up to the expectation of it being a Berkshire replacement. As much as like the company, it's not delivering the same goods. And part of that, I would argue, is the multiple the market assigns it. So Tom Gayner is the CEO of Markel. He's actually a very talented investor. If you open up his actual track record of investing Markel's money, it's quite good. He has very consistently beaten the S&P, often by several percentage points per year, 13% a year, 14% returns, whereas the S&P averages 9 or 10%. However, that's not the entirety of Markel's business. They still have an insurance business. For example, last year, which was a year of bad lawsuits and high awarded damages, social inflation they call it, didn't do as well. So it's not just a story of Tom Gayner's investment prowess. It's also a story of the multiple external investors, you guys, the market, assigns to Markel. And it's got a PE of like 8 point something, whereas Berkshire Hathaway has a PE of 12 point something. Yep. So in other words, even though they're very similar businesses, the market is assigning Berkshire a PE ratio of nearly 50% higher than it assigns Markel. So the same earnings are worth meaningfully more under the Berkshire brand than under the Markel brand. And that's at least part of the reason the Markel stock price has just not kept up with Berkshire's.
Mm-hmm. Agree.
Yeah. So let me ask you this, Shaoping. Someone might say, okay, yes, got it. That's right. Those are historical, factual numbers. But Buffett is 93 years old. Unfortunately, Charlie Munger, his longtime partner, passed away on November 30th at the age of 99, a month shy of his 100th birthday. Actuarially speaking, Buffett is not going to live forever. Tom Gayner is, I think, 62 years old, so he's got a lot more chronological runway. Yep. Without Buffett, Berkshire loses something, not just Buffett's judgment, which has proven to be excellent, but it also loses a certain cachet. That cachet attracts deal flow. It attracts people who are motivated by money, but also who want the prestige of selling their business to Berkshire, especially in the private company side. They say, you know what, I want to go out with a bang. I want to retire from my business or step back and say that I sold it to the world's greatest investor. And that's another competitive advantage Berkshire has that most other companies don't. So with Buffett one day no longer in Berkshire's picture, does Markel look more attractive to you?
To myself, probably yes. Because if we look at the multiple, we can see that Markel currently is cheaper than Berkshire, right?
Mm-hmm.
And then it's kind of like a baby Berkshire. And if Buffett's gone, it's definitely going to influence the stock price. So I would love to give Markel a chance. Like in the future, probably they're going to do better. Maybe.
Okay, yes. So I hear what you're saying. You're sounding a little bit hesitant, like you're not totally sold on Markel, but you probably would look more brightly upon it. And I'm guessing, especially as it delivers better results. And I'm thinking your emotion, your feeling probably represents how much the market is looking at Markel. Like they like it enough, but they're just not quite like super fired up about it. Certainly today we saw thousands of people who were fired up about it. That's the loyal crowd, and this is probably going to grow over time. But I think you're ultimately right. The verdict is the market is a weighing machine, and it weighs the public writ large, the investing public's viewpoint. And so far they're just not ready to pay that premium for Markel. But perhaps if Berkshire's star dims a bit and Markel keeps showing good results, we might see better results for Markel. And by the way, we're showing this because everyone knows Berkshire. Not everyone knows Markel. And BBAE, we want to bring you stocks to consider, not recommendations, of course. You have to do your own homework and make your own decisions. But we want to bring you interesting ideas. And because we know everybody knows Berkshire, not everybody knows Markel, we thought we'd bring this one to your attention. So if you've got questions or if you've got other ideas for companies you'd like us to look at or investment themes you'd like us to look at or just general questions, don't be shy. Just let us know. We make content for you, so we're happy to try to make you happy. So hopefully this video was helpful to you. Shaoping, thank you very much. You did a lot of research. That's great too. Actually, one more question. Speaking of the research, I see I'm recording my eye here. Markel owns a mix of public equities. Berkshire has public equities too. How are those compositions different or similar in your mind?
Well, before that, there's a fun fact that Markel, the top holding of Markel is Berkshire.
Very incestuous.
Yeah.
Yeah. And Berkshire held Markel until like a couple of weeks ago, or sometime in this quarter. They disclosed it a couple of weeks ago that they had sold their Markel shares, and Tom Gayner was kind of bummed about that. But hey, life goes on. So it's kind of interesting. They were both kind of holding on to each other in some corporate romance kind of way. Okay, so fun fact aside, what do you think overall?
Well, overall, if we look at the sectors that they own, like they're actually pretty similar. They don't like Markel didn't randomly pick the stocks. They also following the same logic. They're picking some really good company at some cheap price. They're doing that. So overall, I think
they have Google. I'm looking here: Berkshire, Google, Barnes & Noble, Home Depot, Amazon, John Deere.
Yep.
Each of those are decent 3 to 4% size positions in the Markel portfolio. Whereas with Berkshire, you got Apple, right, which used to be 50%. Now it's like 40%. And probably going to go down more because Buffett's probably going to sell more. He sold 13% most recently. So, but broadly similar. Interestingly, neither company really avoids tech. Which is telling you something. So yeah, it is really a baby Berkshire, just without the multiple. So for better or for worse, that's what it is. I'm a long-term optimist. I do think that's why I own shares. I do think over the long run it'll probably start to do better. I think just awareness is a big part of that. So as we make more videos like this, people find out about it. More people come to the annual meeting. They like the company. That's probably going to lead to a bit higher multiple, but it's something that takes time.
Agree.
Awesome. So, Shaoping, thanks for doing all that research, and thanks to you guys, as always, for watching us at home.
Thank you.